Then, how do you view the current trade fight between the U.S. and China as far as what comes next?
Well, we've entered a new phase in terms of this administration's trade policy. On the one hand, a big victory for the hardliners, the Navarro wing. Substantial tariffs on Chinese imports are really here to stay, and that's what he wanted to achieve. On the other hand, a big win for the more dovish, Kudlow wing of the party, as Trump walks back import tariffs on metals from our NAFTA partners and delays auto tariffs on the Europeans. So this is a direction in which Kudlow has been trying to push the administration for some time.
Did you see the latest from the Commerce Department looking at a new rule to impose anti-subsidy duties or tariffs from countries that undervalue their currencies?
Yeah.
I can't even with this story. That is impossible to determine. How on earth are they going to do that?
Well, you know, the U.S. Treasury, even going back to the Obama administration, has tried desperately to find some quantitative means to define currency manipulation.
Well, the Treasury does it, and guess what? They find that nobody manipulates their currency.
Well, the Obama Treasury didn't want to come to that conclusion because they didn't want to implement tariffs. But, of course, Congress had been ratcheting up pressure on the Obama administration. And really now this is an open lane for the Trump administration because the Democrats are not going to oppose him.
Yeah, given that, Samir, I mean, there is this circularity to trade relations, especially with countries like China, even Mexico. I mean, equities down 4% from the high. How much has been priced into this new chapter then?
We don't think a whole lot at all. You know, if you look at the forward trajectory of earnings growth, it's really under fire. You know, if you look at the top line, that's starting to slow. Sales growth is about as weak as it's been in the last year or so. And then you've got margin pressures. You've got margin pressures from wages. You've got margin pressures probably from tariffs. Hopefully they reach some kind of deal at the end of June at the G20. But if they don't, the market's going to have to price in a lot of the slowdown that we've seen on the growth side.
I guess we should start asking everybody, is it your base case that we get this fourth round?
Yeah, it is, at least right now, because, I mean, if our target is to be achieved, we've got a target of 29.50 on the S&P, which is, you know, a little bit of upside from here. We really do need that trade deal to come together. If it doesn't come together, there's probably a little bit more downside in markets. Doesn't mean that markets won't eventually stabilize, but, I mean, it would be a disappointment right now. They're not discounting it.
Goldman tries to put some numbers on that. They say fourth round of tariffs, take 4% off of stocks, add additional auto tariffs, take 7% off of stocks. Do those numbers sound reasonable to you?
They do. I mean, they probably start to take you back kind of in the realm of, you know, something with a 26 or 27 handle on the S&P. That's probably kind of right in between where we were in December and where we were just recently at 29.50.
Then back to China for a second. How do you view the approach to Huawei, and what is your opinion on sort of this, what seems to be this rising nationalism we're hearing out of China, in part in response to what we're doing?
We're seeing a new Cold War in the tech sector. You know, going back to the 1940s, we divided the world geographically with the Russians. Now we're actually doing it in cyberspace with the Chinese. You will see a China region of the tech world developing around Chinese 5G, Huawei, and you will see an American version of that. And there's going to be a real competition for allies and counterparts in building this.
Is that a good thing or a bad thing for the global economy?
Look, it's clearly a negative for the global economy, but this is one area where the national security issues are real. So the president is not facing any serious resistance either from his own party or from the Democrats on this. Again, this is an open lane. Even if the president should lose his position in the next election, you're going to see continuity in this.
If the NatSec risk is real, how much does he owe us in terms of evidence or smoking guns about Huawei's ties to the party or their nefarious intentions regarding our own security?
Well, you know, the president has never been particularly adamant about the need for hard evidence. He has convictions about where we stand on these matters. But look, going into 2020, he's got some heavy headwinds coming against him. U.S. trade-weighted import tariffs now 4.2%. By far the highest in the developed world, higher than those of China and Russia. The New York Fed recently estimated that U.S. households were going to pay $831 a year more for goods and services because of the tariffs.
As David referenced, the Chinese nationalistic tone, which has really been building throughout the week, where does that take us?
Well, we've hit a brick wall in terms of these trade negotiations. The Trump administration is demanding structural reforms from the Chinese government that really hit against their governing philosophy, which is intellectual property acquisition through all means fair and foul, technology transfer, boosting national champions, particularly state-owned enterprises. I don't see President Xi backing down on these issues anytime soon.
Are the Chinese able to go forward with the next step, which is something Wall Street worries about, boycotts of American products and source products overseas? I mean, are they able to take this to the next level and really implement some sort of economic policy around it?
They're going to be far more targeted than the Trump administration. They don't want to see tariffs across the board because they recognize that it's going to hurt their own economy. But they're making a political calculation that the president will not be able to bear the pain going into a 2020 election campaign, and therefore he will be the one to back down first.
Samir, what does what you're hearing here mean for your view of overall growth as the rest of the year unfolds?
Yeah, I mean, that's one of the things that I was going to add, too, that Ben mentioned was that, you know, while the president might not face resistance from his party or from the Democrats, he will face resistance from the markets and from the economy. I mean, again, at least right now, for us, for a lot of the consensus, you know, a walk away from the trade deal and tariffs that are ratcheted up on a broader range of goods are not in the consensus estimates for earnings and not in the consensus estimates for economic growth. So those will probably have to come down for, you know, for large parts of the street. So unfortunately, that will be a downside risk.
So, Samir, do we continue to load up on Verizon and McDonald's and utilities? How much of that? I mean, that does seem a tad overbought in the short term, doesn't it?
It does, but people tend to pay up for that towards the later, you know, innings of a cycle. And so we would continue to focus on quality. We would continue to move up in market cap. Small caps have not been the place to hide. Now, we do want to make some cyclical bets here and there. So technology, consumer discretionary, financials, which are much more domestically oriented. We like energy. And then industrials would probably be the one area that we like that's probably most exposed to trade.
You know, it's not all doom and gloom in terms of the data. Yes, we've seen a little bit of pain in manufacturing sector and the durable goods report today and market report yesterday, Samir, but we also saw jobless claims go lower. I think they were at 211,000. I mean, if there was really some sort of crisis of confidence at the business level because of all of these headlines, wouldn't you see it show up there on a weekly basis in terms of more Americans filing for unemployment benefits because of being laid off?
Yeah, no, that's a great point. So while you've seen business sentiment soften with the PMIs and the ISM, et cetera, you haven't seen initial claims yet. Now, that being said, you have seen it in some of the layoff announcements that Challenger Gray puts out. So again, I think there's a lot of different ways to look at the labor market. I think it's fair to say that it's really very stable right now. It's easy to find a job. But at the margin, you know, there are signs that maybe things are weakening.